Hallo im Podcast von Trending Topics. Ein Token-Crash erschüttert derzeit die Krypto-Welt, denn am Sonntagabend ist der Token der Mantra-Blockchain innerhalb weniger Stunden um 90% eingebrochen. Mantra wollte eigentlich als Blockchain für tokenisierte Immobilien groß rauskommen und hat sogar Deals mit großen Immobilienfirmen in Dubai geschlossen, die sogar Donald Trump zum Netzwerk zählen. Und jetzt der Crash. Unsere beiden AI-Hosts Algo und Rithma diskutieren heute im Podcast den Crash von Mantra und was dahinter stecken könnte. Viel Spaß.
You know how sometimes things seem totally fine and then bam, the floor just disappears?
Yeah.
That's kind of what happened last Sunday evening with the token. You know, the one for the Mantra blockchain?
Oh, definitely. It was quite the event.
We saw this absolutely shocking, 90% crash in its price, just gone in a few hours.
It was really something. If you were looking at the charts, maybe 6 p.m. Central European Time Sunday, OM was still over $6.
Right.
Then you look again around 10 p.m., and it's down to, what, like 40
It's
cents?
2 cents from $6.
Yeah. It's recovered a tiny bit since, maybe hovering around 80 cents now. But that initial drop, I mean, the scale of it is just huge.
Huge is right. We're talking, what, $5.1 billion in market cap? Just poof, gone.
Evaporated.
In what felt like seconds.
Yeah.
And this wasn't just some random coin, right? This was Mantra.
Exactly. A project that had been, getting a lot of buzz, especially around tokenizing real-world assets, RWAs.
Right. Things like real estate. They were trying to be the new digital home for that stuff.
That was the narrative, yeah.
So what on earth caused such a massive collapse? That's what we want to dive into today.
Yeah, let's unpack it.
We'll look at what happened right after the accusations flying around and maybe what this tells us, about RWA tokenization and the whole crypto market scene, especially if you're trying to understand these super rapid shifts.
Exactly. I mean, the speed, the scale, it's not just dramatic theater. It's significant.
Right.
It makes you have some pretty tough questions, not just about Mantra, but about the whole system, the exchanges, everything.
Okay, so as you'd expect, the moment this started happening, social media just exploded.
Oh, yeah. Predictable.
X, Twitter was just flooded. Everyone's scrambling, trying to figure out what went wrong. And, well, pretty quickly, suspicion fell on a, let's say, familiar suspect in crypto dramas, didn't it?
It did. Given, past incidents in the space, eyes immediately went to the founders.
Including the CEO, John Patrick Mullen.
Yep, him and the team. And the term rug pull started flying around almost instantly.
Right. Maybe we should quickly explain rug pull for anyone who's not deep in the crypto lingo.
Good idea. So basically, a rug pull is when the creators of a crypto project just suddenly cash out. They sell off their tokens, tanking the price, and then they disappear.
Leaving everyone else holding basically worthless digital dust.
Exactly. It's a big fear for investors in this space. Understandable.
Totally understandable. So seeing a 90% drop so fast, that's where people's minds went first.
Naturally.
But Mantra, the official team, they responded fairly quickly, didn't they?
They did. The official Mantra account on X, they put out a statement. Pretty clear denial. Said the team wasn't involved in the crash at all.
Okay, so what did they say caused it then?
They blamed, and I quote, reckless liquidations. And they were very firm, saying this was not our team.
Reckless liquidations. Interesting phrasing. And while they were saying this on X, what was going on with their other channels, like Telegram?
Well, that's interesting, too. Their Telegram channel, which you'd think would be buzzing or maybe panicking.
Yeah, exactly.
It suddenly got shut down. Muted.
Really? Why?
The official line was to stop misinformation from spreading during all the chaos.
Okay, so you've got massive speculation, an official denial blaming liquidations, and then a key community channel goes silent. It definitely sounds chaotic.
Very chaotic picture, yeah.
But then the CEO himself, John Patrick Mullen, he weighed in personally, right?
He did. He used his own X account, his personal one, and offered, well, it's a very different story.
Okay, different how?
He pointed the finger directly at centralized crypto exchanges.
Ah, the exchanges. Okay.
Yeah. Mullen claimed the whole price collapse was kicked off by, his words again, reckless forced closures of OM account holders' positions on these exchanges.
Forced closures, like liquidating margin positions.
Seems like it. And crucially, he says it happened without proper warning.
Wow, okay. Reckless forced closures. That's a pretty direct accusation against the platforms themselves.
It is. His argument really hangs on the timing and the severity of the crash.
How so?
Well, he pointed out it happened late Sunday evening. typically low liquidity hours.
Right, when markets are thinner.
Exactly. And he suggests this timing points to either negligence or possibly intentional market positioning by these exchanges.
Intentional. That's strong. Did he name names?
Not specifically. He did explicitly rule out Binance, said it wasn't them.
Okay.
But he noted that key exchanges where OM trades include places like Bybit, Gate.io, OKX.
Got it. So his theory, just to be clear, is that these exchanges basically triggered a domino effect, a massive sell-off, by suddenly closing out user positions.
That's the core of it, yeah. He talked about the significant power these centralized exchanges have, discretionary power. And his point is, when that power isn't managed carefully, isn't overseen properly, it can cause exactly this kind of mess. Hurting the project, hurting investors.
Yeah, that makes sense. So for you listening, that's a point to consider, right? The power exchanges hold over your assets or positions.
Definitely. It's a risk factor.
Okay, but what about the other big fear, the rug pull idea? Did Mullen address the rumors that maybe the team or insiders had just dumped their own tokens?
Yes, he tackled that head on. Very firm denial.
Okay.
Said the crash was absolutely not caused by the Mantra team or the Mantra Chain Association or advisors or investors selling locked tokens.
And the locked tokens part is key, right? They're supposed to be held back.
Exactly. He emphasized those lockup periods are still active. And he also pointed out, that the relevant wallet addresses are public on the blockchain. So theoretically, people can check.
Right. Transparency. That helps. What about, there were some other whispers, weren't there, about a big loan?
Yeah, rumors that the team had maybe taken out a large loan using OM tokens as collateral, and that loan getting liquidated triggered the crash.
Did he comment on that?
Denied that too. Explicitly stated the crash wasn't because of a team loan and OM getting liquidated on an exchange.
Okay. So lots of denials. Did he say when they'd give more concrete info?
He did mention that Mantra plans to release more details soon in the coming hours or days, hopefully clarifying what they believe really happened.
We'll have to watch for that then. But regardless of the cause, this whole thing feels like a massive blow for Mantra, doesn't it?
Oh, absolutely. A huge setback.
I mean, they weren't just some obscure project. They'd hit some big milestones. That Dubai license, for example.
Exactly. That was a really big deal. Securing the first official DeFi protocol license from Via Ara, Dubai's regulator. That's major validation.
And now this crash, it must put their big plans in Dubai, especially that multi-billion-dollar real estate tokenization stuff, in jeopardy, right?
You have to assume it puts it at considerable risk, yeah. I mean, if you were one of those partners, wouldn't you be taking a second look right now?
Absolutely. And speaking of partners, that Dubai connection was central. They had deals with some major players there.
Huge players. Most notably, Damek Group. Massive Middle Eastern real estate conglomerate.
Right. And the plan was ambitious.
Very. Tokenizing at least $1 billion worth of Damek's assets. That was the goal.
$1 billion. Wow. And wasn't there another one? Mag Group?
Yep. Mag Group 2, another big Dubai developer. That was apparently a $500 million deal already in place. So these weren't small tests. These were serious commitments.
And Damek Group. That's run by Hussein Sajwani, isn't it? The guy they sometimes call the Donald of Dubai.
That's the one. Billionaire, very shrewd businessman, built a huge empire.
And the nickname comes partly from his business style, but also actual connections to Donald Trump, right?
Yeah, they've done business together.
Yeah.
They even jointly announced that huge $20 billion U.S. data center investment earlier this year. So Sajwani and Damek are definitely major global players.
Which just highlights how significant this OM crash could be for Mantra's tokenization plans.
Right.
For anyone listening, just to recap RWA tokenization, it's taking real things like buildings, art, whatever,
Right.
and putting ownership representation onto a blockchain as digital tokens.
Correct. And Mantra, with OM, had really carved out a niche there. They're becoming a key name in that whole RWA story.
Yeah, the CEO, Mullen, was very bullish on it before all this, talking about revolutionizing asset ownership, making things more liquid, transparent.
Exactly. He positioned the Mantra chain as being perfectly built for this market, increasing efficiency, all that. This crash, well, it definitely casts a big shadow over that vision now.
At least for the near term, yeah. Makes you think about the risks, even in these really hyped up sectors of crypto.
No doubt.
Maybe we should quickly touch on Mantra's background. This team had worked together before, right?
Yeah. The core founders, Mullen, Will Corkin, Rodrigo Juan Miranda, they were behind another DeFi project called Soma Finance previously.
Okay.
But for Mantra, they made a really key technical choice early on.
Which way?
Instead of just creating a token on, say, Ethereum, like an ERC-20.
Yeah, the common way.
Right.
Okay.
They decided to build their own blockchain, a layer 1, using the Cosmos SDK.
Ah, Cosmos, the Internet of Blockchains idea.
That's the one, a network of interconnected blockchains. And interestingly, before this crash, Mantra had actually grown to be the biggest project in the whole Cosmos ecosystem by market cap.
Really? The biggest?
Yep, which shows just how much traction they'd gained.
And the OM token itself, it had been doing really well leading up to this, hadn't it, price-wise?
Oh, absolutely. It was on a tear, hit nearly $5 earlier that week. Even after pulling back a bit, it was still strong, around $4.60 or so.
So there was real momentum.
Definitely positive sentiment, yeah. Investor interest was high.
Was there anything specific driving that surge recently? Any particular news?
Well, one likely big factor was the very recent integration of Ledger.
Ledger, the hardware wallet company.
Exactly, the French crypto wallet provider. They became a validator on the Mantra chain.
Okay, why is that such a big deal?
Because it means Ledger Live, their software that tons of people use.
Right.
And their hardware wallets now fully support Mantra and the OM token. That just opens the door to way more crypto traders globally. Makes it much easier to buy, hold, use OM.
Ah, accessibility. Makes perfect sense. More access often means more demand, pushing the price up.
Pretty standard dynamic.
And Ledger wasn't alone as a validator, were they? They had other big names.
No, definitely not alone. It's quite a list. You've got Google Cloud.
Google Cloud. Wow.
Yeah. Plus TwinStake, HexTrust, Kiln, Vitwit, Republic, Cosmos Station, Block Hunters, Anchorage Digital. Some serious players in both tech and crypto.
Okay, so having validators like that adds a layer of credibility. Credibility, security, trust, all of the above in the eyes of many investors, yeah.
So even though the team might be based in Hong Kong, it really sounds like Dubai became the absolute center of gravity for their business development.
Without a doubt, Dubai's been pushing hard to become a global crypto hub, right?
Yeah, we hear that a lot.
And Mantra really tapped into that. That's where they built those key relationships with DAMAC, Mag Group, the ones crucial for their whole RWA tokenization strategy.
Let's dig into that DAMAC partnership again. $1 billion in tokenized assets. What does that mean practically for an investor? Well, the idea is to take parts of DMAC's portfolio, luxury apartments, hotels, maybe even their data centers, and represent them as tokens on Mantra's blockchain.
Okay.
So instead of needing millions to buy into a project directly, you could potentially buy tokens representing a smaller share. The goal is more efficient investment, more transparency, and just opening it up to more people.
And the target for starting that was early 2025.
That was the plan mentioned, yeah. Early 2025 for initial implementation.
And Mantra's job is basically providing the tech rails for all this, the blockchain itself.
Precisely. As a layer 1 built specifically for RWAs using Cosmos Tech, including the IDC protocol for talking to other blockchains, they provide the infrastructure.
Right. Allows token creation, trading, management securely.
And potentially connects those assets to the wider DeFi world through Cosmos eventually.
It's also interesting that DAMAC itself was already crypto-friendly before this big Mantra deal.
That's a good point, yeah. They started accepting crypto for property payments way back in 2022.
Shows they were already leaning into the UAE's whole pro-crypto stance.
It definitely aligns with that national strategy.
And this whole RWA tokenization thing, it's not just Dubai, is it? It's a global trend people are watching.
Oh, absolutely. You see major consultants, McKinsey, BCG, putting out reports predicting massive growth. Trillions of dollars by 2030, some say.
Trillions, wow.
Yeah, institutions, governments, they're all starting to see the potential benefits. Faster settlements, access to illiquid assets, stuff like that.
And just circling back to Sejuani and DAMAC for a sec, that $20 billion U.S. data center plan with Trump, it just shows the scale they operate on, right? While they're also doing this cutting-edge tokenization stuff with Mantra.
Exactly. It paints a picture of a company playing in traditional big leagues, but also actively exploring, the technological frontier. Diversified, forward-looking.
Okay, now let's talk about that regulatory piece again. The license in Dubai, that felt really important for Mantra's story.
Hugely important. Antro Finance FCE, that's their DeFi arm, getting that VASP license, Virtual Asset Service Provider license, from Vieira. That was a major win.
And VASP, that lets them do what exactly in Dubai?
It's pretty broad. It lets them run as a virtual asset exchange, act as a broker-dealer, handle administration, offer investment services for virtual assets. It's the stamp of approval you need to operate properly in that regulated environment.
Shows commitment to playing by the rules, which is crucial for attracting serious players.
Absolutely. And for you listening, That kind of regulatory green light can often be a signal of a project trying to build something sustainable long term.
So not just symbolic, it actually enables their business plans.
For sure. That VARA license was meant to be the foundation for their global expansion, allowing them to create compliant financial products, especially targeting the Middle East initially with that RWA focus.
And the CEO, Mullen, he was pretty vocal about how big a deal this was.
He was. He praised Dubai and VAR for being leaders in crypto regulation, called the license a critical step for Mantra's global ambitions. Having clear rules helps attract the bigger fish, the institutional money.
Yeah, it sounds like their whole strategy was about bridging DeFi and TradFi, decentralized and traditional finance.
That was exactly the narrative. Building an ecosystem for institutions, for qualified investors globally, using blockchain for speed and security, but within a regulated, non-custodial framework.
Trying to get the best of both worlds. DeFi's innovation with TradFi safeguards.
That's the pitch. Transparency, quick settlement like DeFi, but with the regulatory oversight and investor protection people expect from traditional finance. And that VARA license was their key to unlocking that, especially for clients in the UAE.
Okay, so let's try and pull this all together for everyone listening. We've got this incredibly sharp, sudden crash in the OM token price, 90% gone.
Right.
We heard the instant reactions, those rug pull fears.
Which the team strongly denied.
Right. Then CEO Mullen offers his explanation, blaming reckless liquidations by centralized exchanges.
A very different angle.
And meanwhile, this was a project Mantra that seemed to be doing a lot of things right, leading in RWA tokenization, landing huge partnerships in Dubai with giants like Daymac.
And getting that crucial regulatory license from VARA.
So it's a really messy picture, isn't it?
It is very complex. You have a project with seemingly strong fundamentals in a hot sector, big partnerships, regulatory approval, and then this happens, bam.
Yeah.
With conflicting stories about why. It really highlights the sheer volatility and the unexpected shocks that can still rock the crypto world.
And for you listening, maybe trying to make sense of these rapid developments, get those aha moments. This whole Mantra story is a stark reminder, isn't it?
Definitely.
A reminder of the risks, the potential pitfalls lurking, even in projects that look solid, that look like they're on the up and up, the speed, the scale, the unanswered questions. It's definitely surprising.
And what's really interesting here, maybe a key thing for you to take away, is the tension it exposes.
Tension between what?
Between the sort of decentralized dream of crypto and the reality of how much power centralized players, like these big exchanges, still hold.
Ah, right. Mullen's whole argument points right at that.
Exactly. This incident is kind of a wake-up call about how interconnected everything is and where the vulnerabilities might lie in this whole digital asset ecosystem.
So maybe a final thought for you to chew on. Given this really dramatic event with OM and Mantra, what does it really tell us about the risks right now? About the potential weak spots in crypto, and specifically in this push to tokenize real-world assets?
Yeah, what are the absolutely crucial questions investors or anyone just interested in this space should be asking themselves now as they try to navigate this constantly changing landscape?
Definitely something worth thinking about.
So, das war die heutige Folge des Trending Topics Podcast. Wenn es euch gefallen hat, lasst uns doch 4-5 Sterne als Bewertung da und folgt dem Podcast auf Spotify, Apple Music und Co. Für Anregungen, Kritik, Feedback oder Wünsche zu zukünftigen Gästen schickt uns jederzeit gerne eine Mail an feedback@trendingtopics.at. Weitere News zu allen Inhalten gibt es natürlich tagesaktuell auf trendingtopics.eu. Danke an dieser Stelle an Geocast für die tolle Post-Production. Euch danke fürs Zuhören. Bis bald.